Will NVIDIA 10-for-1 split on Monday be a sell the news event catalyst that sends the market lower? Let's go. This week on SPY, after a couple of weeks of moving sideways, SPY moved higher on ADP jobs moving lower. But on Friday, the typically correlated ADP job and non-farm payrolls were anything but, as a hot print created indecision for traders as we enter a week with CPI and Fed interest rate decision on Wednesday, PPI on Thursday, and consumer confidence on Friday. These will definitely move the tape. Now, if we look at the last month or so of trading, we notice that volume has been pretty much lower than expected. So is this just normal market conviction as we head towards summer, or are traders running out of equities to buy at higher prices? Let's unpack some of the key areas of support and resistance to help us understand which way this market is going to move. And I do this because if 500 stocks are moving in one direction, it sometimes can be hard to believe that I just spotted the one awesome, great trading opportunity. Digging into the weekly, it's great to see a couple things on this chart. The first thing we notice about closing price this week is that it didn't do it by much, but it did close above the wick from a couple weeks ago, which is bullish. And wicking through and closing above this 5 exponential moving average is bullish as well. This means that 533 becomes the first obvious area of support. And being that price has a ton of trading volume at 529.45, this means that 530 is on our radar for strong support as well. Being that 523 was a breakout area, it wouldn't be odd to retest this before moving higher. But get below this wick at 518 and something different is going on. And we notice this Bollinger Band, the thing that price stays within 95% of the time. It's been kind of slowing down its ascent recently and even acting as resistance. So it wouldn't be unusual to see this Bollinger Band slightly expand as well. But the lower Bollinger Band has been still ascending a lot faster, and it looks as though these Bollinger Bands are starting to squeeze. So let's get a little bit more definitive because the Bollinger Bands aren't helping us a whole bunch on figuring out where resistance may go from here. So if we recently look at this wave, it almost looks like we put in a first wave here, a second wave down, a third wave up, a fourth wave down, and now we're currently in this fifth wave. So let's figure out where resistance will be on this fifth wave. Now we know that if we're in wave 5, it should be pretty similar to wave 1. So let's go ahead and measure wave 1. So we can measure that from the bottom of here to this high, and we see that it almost went up about 4%. We'll say 3.75%. So if we measure from the bottom of this wick on this week, that means that if we snap the chalk line somewhere around 3.75%, we see that takes us up to about 538 area, we'll call it. Now, even though we talked about 538, typically the market likes to deal in round numbers, so I'll go ahead and strike a resistance line at the 540 area. It wouldn't be unusual to spike through 538, almost making it to 540 before reversing. And we have to ask ourselves, this week we almost got to 537. Is this enough? And the reason I mention this, as I mentioned in the intro, typically when you deal with stock splits, they are a buy the rumor and sell the news event. So once the split occurs, typically stock prices head lower. Now, if we were to look at NVIDIA's last split, it actually went another 20% higher. But whatever NVIDIA does, let's face it, it's going to move the semiconductors and it's going to move the Qs and SPY as well. Now, this MACD is barely below the signal. And I'm sure next week, if we were to break above this, that means that we would continue momentum to the upside, and that certainly would make the bulls happy. But there really is a lot on the calendar, as I mentioned earlier, that can move the tape. Well, thanks for joining, as that's all I have for now until the next video, and we'll see you then.